You doing? George here from Credit Recovery. Go ahead, back at it again. All right. So you clicked on this video. You want to see how to increase your credit score. I'm your guy. Why am I your guy? Because I am what you call a loan underwriter. Pretty much, I am a person that has the authority to approve, decline, and counter a loan that you put into the system. So I've approved loans for auto loans, mortgages, home equity, lines of credit, RV, motorcycles, ATV, personal loans. You name it, I'm almost done it. Just pretty much any type of loan that you would go and apply inside a bank, credit union, or financial institution, like Capital One. Now that I got that out of the way with my flexing criterias, I don't know what I'm talking about. Credentials. That's what I meant, not criterias. Take that back. Please take it back. All right. If you're new to here, remember to like, subscribe. Make sure you hit that ring notification for all. If you're on your phone, it should be all the same thing. All right. So we're going to be reacting over people's credit scores, or not people's credit scores, different people that are gurus for credit, and I'll go ahead and give you my thoughts on it. All right, let's go ahead and jump into, let's start off with this guy on how to get a car loan. Let's see.
So if you want to get a car loan without getting totally screwed, then watch this video, because I'm going to teach you exactly how to get a car loan the right way.
Ooh.
Financing a car is a big deal, because
Absolutely.
if you don't do it the right way, you're going to lose a ton of money, and you're probably going to end up going upside down in your car. Now, I bought my first car when I was 20 years old, and I was so stupid because I got a $20,000 loan for 7 years.
Let's move forward. 'Cause I ain't here trying to bore you guys.
So please don't do it. Now, I'll start by saying that financing a car is basically broken into three different parts.
Three things. You hear this?
You've got to understand how these different parts work in order to not get screwed as the consumer. We'll be looking at the amount borrowed, interest rate, and the length of the loan. Those are the three different parts that you need to understand.
We need to make sure.
These three different numbers will determine what you can or can't afford as a monthly car payment, so pay attention. And just remember that a monthly payment doesn't determine what you can actually afford until you apply what I'm talking about. Now, starting with the amount borrowed, this will be your entire car purchase, plus any taxes and fees, and any money that's left from a previous car loan. It's basically everything you need to borrow from the bank in order to purchase your car. Now, make sure to do the research on the car that you're buying.
All right. He's not talking about anything about getting approved. Let's move a little forward. Let's hope he gets into how to get a car loan the right way, because that's what it's all about. So let's see. All right, let's see.
The bottom line here, though, is that if you do have bad credit, just stick with the cheap car so that you can actually make the payments and build your credit along the way.
Whoa.
The bottom line here, though, is that if you do have bad...
My bad. Let me rewind a little bit.
Your car loan. Now, in order to get the best interest rates, you've got to have excellent credit, or you've got to have a co-signer that has excellent credit in order to make it happen. And if you are using a co-signer, I'm sure that you can make your monthly payments every single month.
Yeah.
Because if you're late just once, you're going to hurt their credit score.
Yep.
And trust me, they're going to be pretty pissed when they go in to get a loan and they realize that...
Yeah, very true. You miss a payment. That's one of the hugest factors when it comes to Experian's credit score algorithm. That's 35% of your pay history, and then Vantage Score, which calculates TransUnion and Equifax. I think it's 45%. Let me pull that up here for you. What is it? Experian credit score breakdown. All right, let's see if we find some pictures here. Nope. I lied. Not that one. Not what I'm looking for. Here it is. Bam. Woo. See? 35% payment history. Take a screenshot of this. Remember it. Write it down. I don't give a fudge. Do it. But you know, this is how you get yourself to an 800 credit score, and I'll go in between that, and then let me see. Vantage. I know I have it here. Vantage. No. Oh, Vantage, not Advantage. Ah! Tell no one. Tell no one. All right, let's see here. All right. So for TransUnion and Credit Union, TransUnion Equifax, payment history accounts for 41%. This is who they use. VantageScore 3.0. So yeah, take a screenshot of this. Have it down if you want to build your Equifax and TransUnion using this model, or understanding this model is what's going to go ahead and determine your credit score. But let's get back into the video here. There he is.
You screwed their credit score.
Uh-huh.
The bottom line here, though, is that if you do have bad credit, just stick with the cheap car so that you can actually make the payments and build your credit along the way. Or you could pay cash and save up like we used to back in the day. You'll also want...
He's right about that, about bad credit. I'll give him kudos about that. So when you do have bad credit, so I'm talking about anything that's below, I think 670 is then considered poor credit. So what you want to do is finance the less amount, because you end up having a lower payment that fits within your budget. You end up paying a lot less interest. Or not interest, I just wait, did I? Let's see. So a low payment, and then you end up having low interest. Look, don't judge me. I don't do this very much. You know what I'm saying? But hit the like button if you're being entertained and learning something at the same time. You know what I'm saying? But anyway, so yeah, so bad credit. Go ahead and have a low amount financed to save money on interest and have a payment within your budget, and you're gonna go ahead and be able to build your credit. Because again, it's not about having the highest amount of loan. It's just about being approved just for something such as $10,000 or $5,000, and then you have an installment loan, which is reporting your credit, and then it's slowly increasing your credit over time, and then your bad credit is counting each year that goes by. It starts counting less and less until it hits that 7-year mark, for it to be wiped from your credit. So yeah, so if you have bad credit, again, just go ahead and just finance less. It'll be within your budget, and you'll save a whole bunch of interest. And you can thank me, but also thank him. But thank me first, please. Thank me. I'm out here breaking it down. He's not doing this for you. I'm the best out here. Like, go ahead and like if I'm the best. But let's go ahead and get back into it.
Want to have a down payment of about 10 to 20% to get the best rates. And new cars will typically need...
Oh, hey, you do not need 10 to 20% down to get the best rate. What that does help with having a down payment up to 20% is that it mitigates risk for us underwriters. So when we're reviewing your credit, or we're just reviewing the application as a whole, and we see you have like 20% down, it makes it look good. I'm like, okay, he's putting some skin in the game, which, in case if, you have a great credit score, excellent, in case you don't want to pay it anymore, you're less likely to want to let that car be repossessed because you put that money down. And then down payment's really good for people that have bad credit. I would say you at least, if you have bad credit, like a credit score 660 and below, what you want to go ahead and do is at least do a minimum of 20% down of the car's value. So then you can increase your chances of being approved. So again, every scenario is different, but like someone that's... but the more that you put of a down payment, the better. It helps. It lets us know that, okay, he has bad credit, but he's at least put 20% down at least on a vehicle. It's going to at least help the cases. But this interest, that the down payment will help with interest rate, no. The interest rate is mainly factored by your credit score. So let's get back into it.
Need about 20% down because of their fast depreciation. I know that 20% down is a lot, but you've got to understand that in order to get the best rates,
that's less than a house.
You've got to make a few sacrifices. If you have...
Oh, I also forgot to mention, a down payment is really good for people. So that's also... So if you have bad credit, doing 20% down will help you. So maybe you're like, oh man, well, I don't have a bad credit. I am excellent with my credit. All right, for you people. All right. So if you have a good to excellent, or just average, anything above a 670 credit score, if you're trying to move into a higher loan payment tier, that is that will help you extremely, because the last thing we want to do is give someone a $700 payment when they're the only experience with their credit they have is with car loans around 300 and below. So if you're definitely trying to bump up to the next tier, or just trying to get more of an expensive car, you have to at least put a good down payment, because again, it mitigates the risk of you letting the car being repossessed, and it's an overall makes your credit application look a lot better to us underwriters when we're reviewing your application. So yeah, it increases your chances of being approved for that vehicle. So yeah, let's get back into it.
Have an existing car that you can sell, just take those profits and use those towards your down payment, and you'll probably have enough. Now, if you don't have very much down, you can at least see what the banks will give you, because it's worth a try. The best car loan interest rates are typically about 3 to 5%, which will cost you about 30 to 50 bucks a year per $1,000 that you borrow. So if you're financing $20,000, then you're going to be looking at about $600 to $1,000 a year in interest, but that's on optimal credit and with a good down payment. And if you are given a rate that's higher than 5%, then I would highly suggest working on your credit score or paying cash for the car so that you don't go completely upside down on it.
Okay, that's a little subjective. I get this is more of an opinion. This is not more like, oh, you should really do this. But when it comes to your interest rate, so if I'm talking about more for people that have bad credit. So if you have bad credit, sometimes you gotta, if you're trying to rebuild your credit or trying to increase your credit because you have a low credit score, sometimes you do need to just take the rates. Well, that is an option. I'll take that back. Yeah, it's an option to take that, but you need to start somewhere. That's the thing. You know, I was like, unfortunately, at this case, you know, we can't be choosers, because again, we don't have the best credit, so we have to get it where it's due. Because again, remember, you can always refinance down the road as your credit gets better, but you do have that other alternative option of just not financing, which again, it's good, keeps more money in your pocket. You can't be mad, you know, you can continue doing more vacations without a car payment. So yeah, so it's like I do think that's more subjective, especially if you're building your credit, like, because sometimes if everybody is around is giving you like a 7% auto loans, you know, different lenders, that's what they're giving you, like, that's what you, unfortunately, that's the rate that you qualify. So if you're looking to get a car, sometimes, you know, you gotta do what you gotta do. And again, you can always refinance in the future. So let's get back to it.
Being upside down in your car means that you owe more than the car is actually worth, and that is not a good thing. Cars naturally depreciate on the road,
not a good thing.
Which totally sucks, but it is normal. But just keep in mind that you don't want to be paying a ton in interest, because you will go upside down in your car. Now, when you decide to finance a car, I would stick with just banks and credit unions, because they always have the best rates.
Yes.
Just shop around online, and I'm sure that you'll find a bank really quick and easy. And please don't go with your local bank just because you know who they are, because that doesn't always mean that they're going to have the best rates. Just always go with whomever has the best terms, because that's going to save you the most money on your car loan. Now, as an example, I live in Utah, and I actually financed a car once through a company in Canada because they had the best rates, and it was easy to just pay online. Dealers can also get you really good rates on car loans, but just make sure that they don't get a cut of the interest rates. And if they're not taking a cut, then go ahead and use them, because it's a lot easier, and you probably only have to get your credit pulled once. And sometimes car manufacturers will even offer their own rates, which are typically really good, from about 2% to 0% on new car purchases. So if you're looking into a new car and they offer 0% financing and there's nothing funny about it, then that is a seriously good deal. Now, if you've made it this far into the...
Okay, well, with the manufacturer financing, Honda Financial, Mercedes-Benz Financial, like, in order to get those interest rates, keep in mind, you need to have excellent credit in order to get those. Stop myself from sneezing. That would be embarrassing. But, in order to get those interest rates, you got to have an excellent credit score. So, he didn't mention that. But I'm telling you, this is why you should like, subscribe, put a comment below. Come on.
the video, please give it a thumbs up to help me out because it's always much appreciated.
Thumbs down, baby.
And finally, let's cover the length of the loan, which is the amount of time that you're going to be making monthly payments until the loan is paid off. Just remember this: the longer the length of the loan,
let's see what
for 60 months.
Okay.
Your monthly payment is going to be about $300 a month.
Okay, we're gonna stop there. So this guy didn't talk about anything about the underwriting process when it comes to getting a loan, because I think that's the most important. If you understand how to get approved for loans, then you know how to better prepare yourself for this, and you know how to better prepare yourself, because that's really what it's all about. You got to know more the process of what it takes to get approved, which again, that's me and a loan underwriter. That's why I can make this. I don't think it's bad what he's saying, but I don't know. The title is just misleading. Let's get out of here. Let's go to another one. Alright, let's see here. Let's go to... we'll go to these people. Alright, so these people are called Fresh and Fit. They're like they like to give financial advice. Let's see what they're talking about. So 5 things you need to have a perfect credit score. Let's see. Alright, let's see. Why is credit important? What is a FICO score? No. Alright, learn your score regularly. Alright, let's see what they got to say right here.
Hey, have you ever heard something like this before? Who wants to make $1 zillion?
My bad. Shoot. If you want to help me so I can get ad-free, donate, and like, and subscribe, and ring with notifications. Let's get started.
So we have 5 main points we want to cover here for your score, and we'll do from 1 to 5 regarding that, okay? So number 1 is know your score regularly. So for example, mine always says on the show, if you want to get to a destination, right, you should know where you're going. You shouldn't just guess there or gamble. You need to know, cool, what does the GPS say to get to that point? Same thing with your score. If you don't know what it is, how can you improve it? So let me give you an example. When I first came to America, guess what? I had a 0 score. Obviously, I have no score, I have no setup, nothing. So
here we go. How to go from 700 to 800.
So do you, Mike? Hey, appreciate that. Zaffron says, my credit score has been hovering around 725 for the last 6 months. I want to hit at least 800 ASAP. What do I need to do to raise my score? I'm 24 in case age is relevant. Bro, that's a pretty good score. Now, main league, right, guys? History is going to be very important. So, for example...
All right, I don't know why it's like this. Auto. Let's refresh. Let's hope.
Example. Luckily for me, on my credit score, my mom had a card for me when I was younger that was still open. So the length of history was so long that when I came to America for the first time, that the history was still there, and that added to my high score. So you might be new to the game and you might have a nice score.
Okay. So he's talking about being a credit authorized user. So what people don't explain, and I see this a lot with a lot of people that are great with credit score, they're like credit repair gurus or credit score, you know what I'm talking about. So essentially they say, hey, get onto a credit authorized user. That's normally not the first thing you want to do. It doesn't help because, okay, so when we're looking at your credit, when it comes to being an authorized user, if that's the only thing you got on your credit, then if that's the only thing you'll have in your credit, then it doesn't look good. You really don't have any credit history, because we know as underwriters, because again, we not dumb, I've been doing this for almost 10 years, so it's like we understand that credit authorized users, they do not make payments on the they don't make payments on those credit cards. So what it does is, so when you're an authorized user, pretty much inflate your score. So it's like, it makes it look good on paper, saying that, oh yeah, he's at a 750. The only way that this would really help you with your credit score is if you already have stuff reporting that's actually yours, and then you find someone to make you an authorized user on their credit card, and then it's able to help you. But just off the top, like with him, I think he's straight capping. There's just he will. I'm not gonna say he's not gonna get approved for a loan, but it's not gonna be at a low interest rate. But if this is gonna get you on over to your like an 800 score, not just based off just being a credit authorized user alone, will help you get up there. So yeah, let's continue to see what else is saying.
But you need length now, or like a period of time to get that high score. So it may be length for you. I'm not sure what it is, but that might be the factor causing you not to get that 850 or 800 or higher. Anna says, when it comes to bimbo behavior, are Sneeko and DJ, I can't spell academics. Yeah, you can't spell it. All of a sudden, the exception to the rule because y'all are their friends?
Define what is bimbo behavior exactly.
Yeah.
That they displayed. Like, come on, man.
What are you saying? Juan says, Myron, everything okay?
All right, give me a minute. I don't know why it's showing blurry like this. Alright, let me do that. Direct port access internet. So.
Okay, bro?
No, fresh off the show, guys. Don't worry about it, man.
Quickie says, shout out to you. Quickie says, I'm 19 with a 750 credit score. I want to buy duplex or triplex in Florida in the next year or two. Do you recommend I...
Let me refresh real quick. Oh no.
Want to join the six-figure club? Google and other hiring hundreds of thousands of workers.
Yo, why does it look like this? Like for the commercials, but for my video it doesn't look good? Like, come on. Stop autoing it.
Bimbo behavior exactly.
Yeah.
That they displayed.
All right.
Like, come on, man.
What are you saying? Juan says, Myron, everything okay, bro?
No, fresh off the show, guys. Don't worry about it, man.
Quickie says, shout out to you. Quickie says, I'm 19 with a 750 credit score. I want to buy duplex or triplex in Florida in the next year or two. Do you recommend I raise my score to 800 before I buy property?
No.
You don't have to.
You don't need it. You don't need to be an 800 credit score to start securing real estate, guys. Once you get into the 740 range, like you're good. Like just start acquiring assets. At that point you just start trying to get vanity metrics of I got 800 credit score. Like that's something that you should work towards, but it shouldn't stop you from like procuring property. Once you hit 740 or above, you're pretty much in the excellent credit territory.
Yeah, to be fair.
What is he talking about? Like, he's right that you don't need to get to a credit score, but that the minimum to start acquiring real estate is at 740. That's a little vague. Like, he didn't really give a lot of information. Look, like, when it comes to mortgage underwriting, the important things that we care about is your credit, your assets, your income, your debt to income, also your housing ratio. So essentially, when it comes to your credit, when you're looking at it from an underwriter's perspective, we want to be able to see you, even if you don't have a 740 credit score, you don't need a 740 credit score to get started in real estate. If you want to start sooner, if you don't have the best credit, you can still get into it. It's just obviously you're just going to pay a higher interest rate. But, you can always mitigate by doing a buy down on the mortgage rate and just, paying a fee just to bring down the rate. You could do that. I've heard it's not really the best thing, but, I'm not that type of mortgage expert. I'm a mortgage underwriter, so it's like I understand it from that perspective. But yeah, so when we're looking at your credit, we just want to make sure that you have good enough credit for our minimum at the bank in credit unions, because there are minimums that you do require. And if you go through an FHA loan, which is Federal Housing Administration loan, which those are for the people that don't have the best credit. If you go through them, they're a little bit more lenient as opposed to going through conventional loan, which is done that's more based off your credit. So if you do have credit issues, you don't need to be at 740 to get a mortgage. You just need to at least have I would say at least like 670 and above, because there's this, because every bank and credit union and other financial institutions of mortgages, they have a minimum when it comes to your credit score that you need to be. Again, that just is there to just determine what interest rate you're going to get. So the lower your credit score, the higher the interest rate, and then vice versa. So he not making sense. This is why you don't listen to people that don't know what they talking about fully. Like, I can understand that he does know what he's talking about, but he's being vague about it. And I'm just like, you're supposed to be helping these people with credit, and you're being this way. Like, see, this is why if you need credit, go ahead and comment below, and then we'll go ahead and schedule to go ahead and talk about your credit. If you're looking to go ahead and improve your credit, let's get back into this video.
Here, the 800 plus is like a vanity number. You don't really need it, because 740 and up, they give you whatever you want at the best rate. So, Kafara says, shout out to Viking in the back. Shout out to you. True says, although it would be financially easier to pay off the smaller loans, it would actually be smarter to pay off the larger loans versus as opposed to smaller ones. I mean, you could do it either way, bro, but we're just saying most people want to see how that confidence build up. So if I pay the smaller ones first, build confidence, and then from there, I want to pay off more. But if you can do it backwards, oh, kudos to you, bro. And then he says again, the reason is because the larger loans generate more interest due to the higher balance. And so if you focus on paying off the smaller ones, then the larger ones will be paying more money in the long run.
Let's move on to
Michael said 3K watching. Get the likes up, guys.
Yeah, get the likes up, guys.
Yeah, guys, get my likes up.
All right, good. That's it. Cool. All right, and then number 4 is, so you want to mix up your credit types. So I mentioned earlier having multiple types of credit, for example, car loans, mortgages, or even credit cards. And it's because they want to see diversity. So your score is going to determine how likely you are to pay back a loan. So in this case, they want to see you're able to pay back a car loan, a house loan, and at least a credit card. Because once they see diversity, now they know, okay, cool. This borrower, if we give them the money, can pay multiple types of loans, and the trust is there. Because guys, all the score is basically saying, you know what? We trust that your prior behavior will allow us to give you a loan. And that could be for anything. But if you can diversify it, have multiple types of lines of credit, then you can actually get better benefits. Now, when I was in America for the first time, I could have bought a car cash. For $2K, I could have bought the car and, have that as my car already paid off. But I said to myself, hold on a second. If I use my money that I saved up to buy this car now in cash, my credit score is still kind of low. So what I did was I said, cool, I have the money to pay it off, but I'm actually going to borrow half the money to pay the car off. Because I wanted to show I got a car loan, and then 2, I can pay it off. So just having that extra money there and then paying off that car loan, guess what? Now on my credit score, I have a paid off car that I paid off in 6 months, and it was good to go. So I would just say, guys, if you can actually like mix it up, get credit card, get a car loan, maybe even a mortgage. But I'm just saying this to say as well, don't get stuff that you don't need. If you need it, great, but don't do it on purpose because you just want to say you have different types of credit. Get what you actually need, and then from there you can actually have that diversity.
Ow.
Having different types of credit, guys, is imperative because it shows responsibility in different types of asset classes. So whether it's, having a traditional credit card, having a home loan, having a car loan, it helps. And then in the case of having certain car loans, it might help you with procuring certain types of vehicles. But I would say, we tell you guys all the time, typically you don't want to be paying a car note. You really want to avoid doing that unless like you have some kind of business and you're able to write that vehicle off. But in general, it does show that you're a diversified borrower and that you're trustable. Basically, you're a trusted individual that they can lend money to you on based on regardless of what asset class you're using the loan to purchase. So,
facts.
So it's very important to be diversified. Obviously, you start with credit cards.
All right, let's move on to the next. Let me see. All right, becoming authorities. We already talked about that. How to get yo mama's credit card. That sounds like some fraud, so we're not gonna do that. Let's see. Should I pay loans or invest money first? If you're trying to increase your credit score, then also it would be better if you just pay your loans. Quick 5 recap. So it looks like why HELOC is better than a traditional mortgage. Okay. that has nothing to do with getting a perfect credit score. Let's do a recap and move to the next video.
So yes, that's the last one.
That's it?
Yep.
Cool. So that pretty much covers everything. We'll do like a small recap here. So number one is know your score regularly. So you should have either Credit Karma, FICO.com, or one of the main credit companies you can monitor your score at. Number two is pay down your debt on time. So once again, guys, you got debt you didn't pay off, it's going to affect you. So pay it off on time when you can. But once again, you have to know what you're paying down first of all. And some of these may be in collection. So that's very important as well. And then if you might forget to pay down your debt, set up auto pay. So at least if you forget to say, hey, you know what, here's my payment, it'll be taken out from your account automatically. Number three is choose wisely what debt you acquire. So this includes personal loans, credit cards. Guys, personal debt for the most part is bad. Now, once you can manage it properly, you're good. But we recommend having business debt. But for most people, personal debt is where you start. So I'm going to say offer it. Only get what you need. You don't need a motorcycle. You don't need, dumb personal loans. All you need basically is a credit card, maybe for like shopping and for food, and maybe a car at max, right? Anything more than that's kind of like unnecessary.
Okay, so then to me, it sounds like they're contradicting yourself because for your credit score, at least through Experian, they want you to have diversity when it comes to your credit. So like I said, like having a personal loan, auto loan, credit card loan, if you have an ATV loan, that will go ahead and help. But obviously it's like I said, like you need to diversify your credit in order to get yourself to a great credit score. See, it counts for 10%, not really the highest, but it does help. I would definitely say if you can at least have a minimum of 3 different types of credit. So that would be personal, at least like a personal, an auto loan, and a credit card. If you have those 3, then you're fine. But you do need to have an installment loan, which is anything from an auto loan, personal loan is an installment loan, an RV, an ATV, a motorcycle. Those are all installment loans. And then you have credit cards, which are revolving types of credit that essentially you paid off and then you can reuse it. Other ones, I guess, if you have like a buy here, pay later, like a, Klarma? They're the ones that you can, like, if you want to get like flights on, if you wanted to go ahead and get, pay later on a flight, still run your credit and then report it as an installment on your credit report. So that's another option that you can go ahead and do those type of loans. If you have furniture, that would be more of a line of credit, like a credit card. Like, so if you go through Ashley's Furniture, things like that. But yeah, you need to diversify your credit. You at least have to have those 3, and then it's just it's showing that you can handle different types of debt. So yeah, that's good. We're almost done. Bear with me, guys. Bear with me.
Number 4, for example, is mix up your credit types. For example, mortgages, auto loans, credit cards, like I said earlier.
I said that.
You want to have multiple types of credit on your history. And number 5 says become an authorized user on someone else's account. So for example, your mom, your dad, your auntie, your uncle. Most of these people are going to help you for the most part. If they don't, maybe a business partner or a friend that you trust. But my thing is, guys, if you do this technique, make sure you don't mess them up because they're trusting you a lot with their credit history. So that's very important. Anything you want to add?
Yeah, I mean, if you have these 5 things in place, guys, it's going to shoot up your credit score hundreds of points, man. So these are just some basic things. Are there more things that you could potentially do? Of course, there's always more things that you can do, but keeping things nice and simple here, in the government, and we always just say, call it KISS, keep it simple, stupid. This will help you immensely. So yeah, man, those are some basic foundational stuff that you guys can take into your repertoire.
And guys, learn from our mistakes, man. Like I made a bunch of mistakes for credit. For example, like I said before, getting a motorcycle on personal loan, getting giving my ex-wife my car under my name. Like, if you can avoid these things, guys, I'm telling you right now, you'll be way ahead of me. All right?
All right. So, like you said, this over a span time. So, when it comes to increasing your credit score, my people, it's not something that's going to be a night and day difference. It actually takes years and years before you actually get a credit score. Or get like an 800 credit score or perfect credit score, like the name of their title of their video. Like, yeah, this is not something that within in a year going to be able to get this. It takes time because your credit, how long you've had credit, is a factor for your credit score, especially through experience. So, yeah. So it's like if you're looking for this to be kind of a quick, a quick, fast credit score, it's not going to be possible. And then again, the number doesn't tell us everything on your credit. So, yeah. So yeah, let's go ahead and move on to the next video. Done with this. So for them, Fresh and Fit, thumbs down on how to get your perfect credit score. They were very vague to me. They didn't really go into that much specifics when it comes to getting a perfect credit score. So, all right, let's see. Let's do a little Dave Ramsey.
Heather, how can we help?
Hey, how are you?
We are living the dream, Heather. What's going on?
Yeah, baby, you see this? This is looking real nice now. Yeah, I don't know what was happening before, why the video looked blurry, but that doesn't matter. You just needed to hear the information. So let's see. My credit score is low. What should I do? Let's see. Let's see how the Ramsey team does.
I love it. So I got myself into a bit of a pickle years back. I did a debt reduction program. Oh, cool. It sounds like a great idea. You'll pay off part of my credit cards, not knowing they were going to kill my credit and what was going to go on with that. So I've been working with a program to deal with the creditors and all of it, and I'm just not sure where to go from here. I'm like, I guess I'll leave it at that.
Well, you being in a pickle, Heather, there's a way out of this. And the key is to stop focusing on the credit score. So let me ask you this. Why do you need your credit score?
Well, doesn't sound like they're going to help her increase her credit. But I'm going to entertain this video. So, okay. So, don't ever get a debt management service if you're looking to want to improve your credit. They will go ahead, because essentially what's happening is that you're pretty much, I would kind of look at it kind of similar to like a Chapter 13 bankruptcy. Essentially, you're just, all the debts that you're looking to want to go ahead and consolidate, you'll end up having a low payment. And because the thing is that, so if you have a credit card of $10,000, they try to negotiate so that they can bring down the balance, which will go ahead and help you when it comes to for your monthly payment. So they end up negotiating, getting you like a lower payment by going through their debt management, but it does kill your credit score. If you ever go through that, do not take that serious. That will definitely kill your credit score and not help you increase your credit score. So let's get to this video real quick.
Or to be higher.
I'd like to buy a house, buy property, and I don't know. I'm looking to get married, and I don't know that if it will influence anything in our relationship moving forward.
Hold on, you're saying your future? Do you have a fiance, a boyfriend?
I do.
Okay, and you're saying, hey, this guy's not going to marry me if I have a low credit score.
No, I'm not saying that at all. I want to take personal responsibility for it, and I don't want anything related to that to negatively influence him.
Well, the best thing you can do for your future, for your marriage, for buying this house, is to get rid of all the debt you have. And what happens when you do that, and I experienced this myself when I first started working here at Ramsey and paid my debt off, is that your credit score doesn't go to zero. It's impossible. Well, what happens is it becomes indeterminable. It's a $10 word that means it disappears. You're basically invisible to the credit bureaus. So how much debt do you have? Heather, are you with us?
That truth just shocked her into oblivion.
Oh, we'll see if we can get her back.
So Heather, we'll give her one more shot. Heather.
She disappeared. She went invisible, Ken. Look at that. I think
hilarious.
I spoke it into existence.
That makes it really creepy. Yeah. Or she
That's
fainted.
funny.
I think the idea that her credit score would literally disappear into the ether, I think she fainted.
It was too much.
Yeah.
Well, if she's still listening, let me finish by saying.
Play this out because, okay, let's say she does that like you did.
So here's the thing. People go, I got to get my credit score up, and I'm going to work with these programs and debt reduction, and most of these are scams. And like Heather found out, it just tanks your
said that.
score. It's not super helpful. And so what is helpful is taking control of your own situation and cleaning up the mess. That's really the only way to do it. There's no magic wand they can go, here's an 800 credit score overnight. And so what I want you to do, Heather, is pay off all of this debt, and your credit score will soon be indeterminable after a little while. And then you can do what's called manual underwriting or a no-score loan when it comes to getting a house. So what that is like the olden days, Ken. Not that you're old enough to remember this, but back in the day, they didn't have credit scores to look at to give you a mortgage. So what they looked at was your actual financial situation.
Right.
And they went, wow, you've got an income, you've got a steady job, you pay your bills on time, your utility bills, your rent, whatever it is, and they go, all right, here's a mortgage. So on that front, Heather, you're going to be just fine, and I can tell you that because I went through this exact process not having a credit score.
All right, so here's the good news. Heather is back with us, we hope. Heather, are you there?
I'm here.
Did you faint?
Maybe. I don't know. Some technology somewhere was like, she can't hear the info.
The devil's in the wiring.
All right, so George, take over.
So, Heather, how much debt do you have?
So I feel like I can't even fully answer that. Where the debt was at when the program started and then it went up, I couldn't tell you what the total is.
Well, that's A1. We got to figure out how much money you owe if we're going to pay this thing off. So, I mean, can you give me a ballpark?
Right. I think the one might be at $9,000 and the other might be at like $3,500. So total of that is, say, let's highball it and say 13.
Yeah.
Okay. And what's your income?
My income is about $45,000 a year.
Okay. And here's what I want you to do. I don't know how soon you're going to get married, but I want you to start cleaning up this debt on your own. No more programs. Stop looking for a solution outside of yourself. You are the solution. And that's some really, really good news. And like I was saying to Ken earlier when we lost you there, once you start paying off your debt, your credit score is going to become indeterminable, meaning you're invisible to the credit bureaus. And I'm not worried about the house because we've got great partners like Churchill Mortgage. There's a ton of mortgage companies out there that will do this thing called manual underwriting or a no-score loan, where they just look at your real financial picture and they go, all right, Heather has a real income. She's got a steady job. She pays her bills on time. We're going to give her this loan. And I want you to do it in the Ramsey parameters of a 15-year fixed-rate mortgage that is no more than 25% of your take-home pay.
All right, let's go ahead and stop here. I like his option. It's not the worst option. You can always get a hard money loan, which is a lot higher interest rate, but you don't really have a long term. I'll talk about that in another video. So that is another option that you do have. If you're looking to want to get a mortgage, you can always go through manual underwriting, which again, like you said, it looks at your overall financial picture, which again, it can either help you or hurt you. It really just depends. Because again, if remember when you're filling out an application, you're putting your gross income. You're not putting your take home, which is where it hinders you when you're applying for a loan. But talking about the credit, I like the Dave Ramsey. I actually use a little bit of that and use it as influence to help me pay off, or I guess motivation to pay off my debt. But I definitely don't listen to them at all about credit score, about credit. I do really think credit is something that you really need in order, at least in the U.S., to move together in society. You could leverage debt to get you and build wealth, but again, you have to be financially literate to really get to those places in order to use debt. So instead of using an auto loan, which is bad, it's an asset, but like in the last video, it depreciates, it loses value. So that would be like a bad debt, they would say, versus a house, because you can always rent the house. It ends up gaining in value instead of depreciating in value. With a car loan, now you can rent out your car, which will make it into an asset. But before that wasn't an option. So it's like when it comes to your credit score, they were a very big. Don't listen to them when it comes to credit, because at least from this video, it doesn't look like they want you to increase your credit. So don't listen to them. Alright guys, this is what we're going to go ahead and just do here for today. If you enjoyed the video, like, comment, subscribe, share it with somebody. If it was funny, definitely let me know. are entertaining. I didn't want this to be boring for you guys, just because, yeah, I want to be able to educate you guys on credit in different ways of how to get approved from an underwriter perspective. I was also, FYI, I was a certified credit counselor, but if I wanted to talk about the laws, I couldn't be a certified credit counselor, which sucked. But anyway, yeah. But yeah, keep you guys on the videos and have a great holidays.